We're pleased to have on the Consolidated Communications Newsmaker line this morning, John Knosalla from JK Property Partners, and we're going to talk a little bit about the local real estate market today. Hi, John. How are you?
Hey, I'm doing so well. Thanks so much for having me.
You bet. Thanks for taking some time out of your morning. We know that this time of day is busy for everybody. Overall, the story we've heard for the last 6 months or so is that properties are just flying. And if you've got a home price maybe under $300,000 or so, and you have it priced right, it won't be on the market for too long. Is that still the case?
It definitely is still the case, but doesn't mean that there's not opportunity in that as well. The lower price points, like you said, 300, 250 or under, are still super hard to find. But if you are a step-up buyer, your house has never been worth more than it is today, I can assure you. And so a lot of people are taking advantage of that. And still with the really low interest rates, it's a great opportunity if you're looking to get into that next step-up house, take advantage of the equity you've built in your current home, roll that into the next one, take advantage of the interest rates, you're going to be in a great position.
So let me ask you about that. So let's say you've got a $300,000 house and you're thinking, maybe something $450 or $500 we could handle with our family budget because, as you mentioned, rates are low. But is it going to be too difficult to find that home in that next price up? And will you have to pay through the nose to get it? Are you getting the same kind of increased prices in that level as we're seeing in the lower levels?
It varies, and it does vary per price point. So you're going to have more options when you get into the higher price point. So I just pulled a quick search, and of 187 single-family homes that are currently active on the market, there's about 40 of them that are over 500. So you have more inventory in that price point. Days on market are longer at that price point, but it still means that you can take advantage of maximizing your current investment of where you're at. So again, there's little pockets, like anything under that 250 or 200 especially are very few and far between. So that's why what we like to do is sit down with our clients, understand exactly what it is that they're looking for, because the more that we know about what they want, the better we can keep an eye out for it, or when we stumble across it, they're going to be the first to know. So communication is so key in this, and we've been finding smoking deals for our clients all year. I mean, it's all about knowing what that person wants and setting out and finding it.
Yeah. So let me ask you about that level of supply. Is that a higher level of supply than maybe what we saw 3 to 6 months ago? Is it lower? Is it about the same? What would you say?
No, it's starting to come back a little bit. So there is starting to be a little bit more inventory. But also, having said that, in our market right now, there's only about 34 homes that are available under 200,000 right now.
Okay.
But of course, as you go up in price point, there's more and more. So still between 250 and say 500, there's about 80 homes that are currently available. So that's a decent amount of inventory. And I'm not talking new construction either, because that's another avenue that you can go. Everybody's heard that, the lumber prices, everything is up, which it is. They're starting to see some stabilization there too, which is good. But if you're talking about starting a new construction build, lock you in. When the prices drop, you're set for that, and then you can build your home all while we're finding a buyer for your current home.
Yeah, and how long can you lock an interest rate these days if you wanted to do something like that where you're going to build a house, but right now the builders, it's going to take a while for them to get that house built because the subcontractors are so busy. So how long can you lock a rate for?
Every bank's different, but I know there's banks out there that'll do a 1-year lock, a 6-month lock. So there's some flexibility out there. And I know, we work with all the different lenders in town, and, we can point you in the direction of which one's best for you in that situation.
Okay. How about, you talked about interest rates. I know you're not a banker, but like you talked about with, rate locks and so forth, you probably hear some things about that. The interest rates, are they as low as are we at those historical lows? Has it ticked up a little bit? Where are we from where the bottom was maybe a few months back?
I think we're back at that historical rate right now. I, in fact, just refinanced a property on a 15-year because my payment literally went up about $200 a month, but I'm cutting my mortgage in half. That's how good the rate was from what I had to refinancing it, especially if you're going down to a shorter term note. Man, you're going to take advantage, and you're going to actually see progress in chewing up that principal as you're paying it down, because as you know, when you get into a 30-year mortgage, it's all interest up front, you know, so you don't see the balance go down very much. But if you can take advantage, you know you're going to be in your house for a long time, something you might want to look at, because it's going to chew up that principal really quick.
Yeah, you bet. There's nothing like shortening those term on the loans, no question. What neighborhoods or what areas of the metro area, John, seem to be particularly hot right now?
Well, the new construction has been exploding for years. We've been saying, like, when's it going to slow down? It's not. It's not slowing down. I don't see it slowing down. But I think a major trend, because of those new neighborhoods, the high amount of special assessments that out there, it directly affects what somebody's monthly payment is. So you're responsible for a certain amount of annual installments every year. And the newer the neighborhood, the higher the balance of those specials are going to be, generally speaking. So instead of making your payment towards paying off the street lights and the water and the sewer, people are taking that payment, what they'd be paying, going into a more historic, more established area where there's a lot more trees, closer to downtown, is super vibrant and happening right now. So a lot of people are taking that amount of payment and modernizing these older homes, fixing them up, and creating these older neighborhoods that were maybe a little bit neglected, and they're coming back to life. It's pretty cool to see. And there's just that nostalgia of being in a historic home, but, you know, bringing it up with technology, you know, the electrical and all the modern conveniences of a new home, you can still do in an older home.
Yeah, that's I know a lot of people that are really handy and able to do that work. It's a good spot to be, no question about that. John, it's been a great visit. You've given us a lot of great information. If people want to find out more about how you can help them either buy or sell their house or look at all these other kind of investment things you've been talking about, how do they get in touch with you?
Sure. The easiest way is jkpropertypartners.com. But as I mentioned, most people don't even realize what their home is currently worth. And right now, like I mentioned, your house is probably worth more than it's ever been, ever. And an easy way to check that out is you can go to Fargo-Homevalues.com, type in your address, and you'll get an instant valuation of what your home is currently worth. Pretty cool. Check it. Fargo-Homevalues.com. You got it.
Okay, very good. We'll do it. John, thanks so much for taking the time. Great to visit with you. Continued success. Have a great day.
My pleasure. Thank you.
John Knosalla from JK Property Partners, jkpropertypartners.com.